Welcome back to Africa 24 English for a new edition of your program Decryptage. Today with Harsha Bangari, Managing Director of India Exim Bank, we will discuss the enhancement of trade capabilities between India and Africa. Mrs. Bangari, welcome to Africa 24 English. Mrs. Harsha Bangari, you are the Exim Bank Managing Director. Could you tell us in how many countries you are found in Africa and what are the key sectors in which you invest there?
Export-Import Bank of India has been set up more than 40 years back, and I think our association with Africa also dates equally that far. As the country's export credit agency, we also work on behalf and at behest of the Government of India, where we seek to support partner countries' developmental objectives. So that's a very key activity as Exim Bank we take. Typically there we work with the African governments. I would dare to say that almost all the countries in Africa we have worked with, and there we support these countries' developmental projects. It could be typically infrastructure project in various sectors including connectivity, transportation. So that's the level at which we work on behalf of the Government of India. In addition to that, as Exim Bank, one of our roles is also to promote bilateral trade and investment. India and Africa work very closely on the business side, and that's where we exactly come in. We support Indian companies in all the efforts they have for seeking markets in Africa, as also setting up offices and entities in Africa. We have supported, I would say, lots of Indian companies who have set up joint ventures or subsidiaries in Africa, again with the intent of either forward integration or backward integration. We also have in the recent times looked at the trade facilitation programs, where during the COVID we realized that there are many Indian companies who are not really looking at exporting, especially to countries whom they are not very familiar with. But as Exim Bank, again, because we've been working with the African countries for decades, we have that comfort and the experience of working with these countries and the banks and institutions, and we are trying to use that expertise and see how we could step in along with our partner banks in Africa and ensure there's improvement in the trade flow between the two countries.
According to a report by the United Nations Conference on Trade and Development, foreign direct investment flows to Africa will fall to $45 billion in 2022 compared with a record of $80 billion in 2021. In your view, what are the factors that could explain the situation?
It's very difficult. I'm not really an expert in terms of analyzing the reasons why FDIs could slow down in Africa, but maybe I can give you a little bit of context in terms of what we see back home also, and maybe some of these reasons could become relevant for Africa also, is the environment. So we all agree that since 2020 everybody started looking inwards, and there has been a perceptible risk aversion in terms of taking their operations offshore. So maybe that could be one of the reasons why we are not seeing many investments coming in as compared to the previous years. Secondly, I think the geopolitical situation or a continuing conflict really does not provide that comfort and confidence for an entrepreneur to start investing in a particular country. But if you really ask me, we are seeing these things improved in the last 1 year. If I compare, say, a period of 2022 to today, we are definitely seeing a good interest, at least in India, in terms of more and more investments coming. But I think it's more of a cyclical issue. I think that should get sorted out.
India and African countries are looking at enhancing their trade capabilities. In this line, you launched the Trade Assistance Program. What is it all about?
So basically, the Trade Assistance Program of Exim Bank encourages Indian companies to do business with everyone in the world. So the idea is that we have a very long association, and we keep building on that, where we have collaborated with the banks and the financial institutions system in almost every country, and that includes Africa and other regions also. How we help is that we, along with our partner banks, can take guarantees or confirmed LCs of the issuing banks, and that enables Indian companies to do more business with those African counterparts. We also believe that this also creates a confidence between the two counterparties who do trade with each other, and eventually after a couple of transactions, successful transactions, they will have the comfort of dealing with each other without any requirement or intervention of Exim Bank or the partner bank. We've had an excellent experience in this. In fact, I have some numbers where we have in the last 1.5 years, we have facilitated trade transactions of almost $800 million in Africa itself. And we just started. So I am seeing a great scope in that. And I would say that also benefits both the African companies as well as Indian companies. And going forward, we look forward to improving that as in when we start establishing and improving our infrastructure in Africa also.
The theme of the 2024 AFDB annual meeting was Africa Transformation, the African Development Bank Group, and the reform of the global financial architecture. A very evocative theme given the global economic crisis. What are the challenges for your institutions in terms of investment on the continent?
I may be naming a few of them. They may not be strictly relevant for every country in Africa, because you will agree that every country in Africa is very different. So there will be different sets of concerns or absolutely no sets of concerns. So depending on country it is, but broadly as an lender or an investor, the typical risk appetite which is required to be there, or risk mitigants which are required to be there, that is something which needs to be established. We see projects which are cash accruing. So also it all depends on what type of project financing we are looking at doing in these countries. And if the projects are cash accruing or they provide cash flows, then that gives enough comfort to the lender to invest in those projects. If the projects don't really have cash flows, and if they are in the sense in a priority project for the government, then typically they go into a different channel of government to government funding. So I would say that cash flows, or even in terms of stability. So lenders would definitely look at stability of a market, because when they invest or they lend, they are looking at a long-term picture, and they are not really, so they have to have that long-term outlook in the country in which they are looking. And again, the laws or the laws of enforcement, or the land and labor laws. So these are typical things which the companies would look. Now, when we look at the lenders, we should also look at the Indian. I would not say Indian, or any companies when they invest. So they would also have their own interest when they want to invest in terms of requirement for registrations, or access to markets, or access to regional markets. So I'm sure there are a host of things which a bank would look at before investing or looking at investments.
Mrs. Harsha Bangari, thank you very much for answering Africa 21st questions.
Same here. Thank you so much. Thanks for having me.